Welcome to this week's Q&A. We've got a question from a viewer in New York this week, and it revolves around 10-year government bond yields. And this viewer said, look, I keep hearing stories about government bond yields, 10-year bond yields reaching 5%. And we all know that in the US, the 10-year bond over the last few days actually did hit 5%. And in Australia, the Australian 10-year government bond is also mirroring the direction of what's happening in terms of bonds selling off in the US. So, we've been up to close to 4.9, as it were. And there's a lot of volatility in bond markets at the moment. And this is causing a lot of frustration to people. But look, this viewer is saying, what does this really mean in relation to the interest I'm going to be paying on my mortgage, on my investment property in Australia? He's an Australian expat, and he's asking the question: should I be looking to potentially fix the interest rate on my loans, because I've got a couple of them coming off fairly cheap fixed rates within the next month, and really not knowing what to do? And I think what's happening in bond markets globally has caught a lot of people somewhat unawares, and produced some really disastrous results for people who have held longer dated maturities in government bonds that have been paying very little money in terms of a yield, which are now being hammered in terms of capital erosion. So, long story short, though, I mean, no one knows the answer to this. In my experience over time, generally speaking, I've found that central banks will tend to over-tighten in terms of monetary policy. They'll raise rates too far, causing, as we say, a policy accident, but it's no accident. They're trying to rein in inflation. They go too hard. And then the next thing that happens is, as the labour market starts to unravel and unemployment rises perhaps more rapidly than they're comfortable with, central banks will tend to cut rates, and sometimes far more aggressively than markets anticipate or price in initially. And I think at the moment, obviously, the rhetoric from central banks, developed countries mainly, is that, look, we're going to have to keep rates higher for longer to rein in the sticky services inflation, and we may even have to raise rates a bit further. This is mainly speaking from the Fed, but also from the RBA. So people are really, they're quite anxious, especially the people that are looking to refinance these fixed rate loans that are now expiring before the end of this year, 2023. And it's hard. But as we say to people, look, I believe that central banks are very much close to having finished their rate hiking cycles, or certainly very close to the end. So currently fixed rate loans for, whether it be 1, 2, 3 or 4 or 5 years tend to be quite expensive, and perhaps you're trying to buy yourself some peace of mind insurance and paying a lot of money for that. So in most instances, I think a variable interest rate at the moment, depending on your own personal circumstances, of course, is perhaps a more sort of diversified way of playing this, a bit more conservative in terms of outcomes. So, to bring all this back together again, I think what's happening in bond markets globally is that they may be doing some of the work for the central banks. So they're in fact tightening liquidity, making it harder for corporates to borrow money, so harder for them to spend money. I think that will flow through, and if we do have some sort of credit crunch, then I wouldn't be surprised if you see rates retrace and come back fairly quickly when that may happen. So I would say, in terms of the overall situation, a variable interest rate now, if you're looking to what to do with your fixed rate loan, is probably the most conservative way to play this for now. But we look at these things all the time. So look, if you found this of interest, then please subscribe to our YouTube channel and click like. And if you need some information yourselves about your own situation, don't hesitate to reach out, email us or call us, and we'll have somebody contact you and see if we can't help you with your situation. I'm Andrew Unterweger, and I'll see you at next week's Q&A.